Oh, what is going on, guys? Nick here, back with another video. Today, some pretty interesting news broke that FTX Crypto Exchange is considering buying Robinhood, causing Robinhood shares to jump by about 14% today. Now, the details about the deal have not been announced yet, and the decision itself on whether or not FTX Crypto Exchange is actually going to buy Robinhood has also not been officially announced. We're still waiting to hear on whether or not this is actually going to go through. Now, a couple weeks ago, Sam Bankman-Fried, the CEO of FTX Crypto, has said that they're excited about a potential partnership, but as of now, there are no active conversations advancing the deal forward. At least that's what he says. Now, last week, Robinhood stock had jumped after it was announced that Bankman-Fried's company had taken about a 7% stake in Robinhood. But I think this acquisition announcement actually puts Robinhood in a kind of tough spot right here. There is still a lot of pressure going on against this company right now. Setting aside all of the other issues about Robinhood and how they run their business, between 2020 and 2021, the stock market saw a ton of new people who had never had any experience within the stock market. And to be honest, the rebound from crypto and GameStop madness and AMC, it made it a lot more fun for these investors. They were seeing all of these just random stocks go up, 10, 15, 20% without them really having to do any work. It just made it so easy for them. But now that we've entered into a bear market and a lot of these accounts have been completely wiped out, a lot of that interest has basically gone away and people just aren't rushing into stocks like they used to. For companies like Robinhood, who basically make their money off of new users, this takes away a massive opportunity for growth and new revenue to come into this company. Now, the 800-pound gorilla for Robinhood is the fact that people just really don't like this company right now. All of the trading halts on GameStop, where people thought that Citadel and Robinhood were working together to try to manipulate the stock price and potentially protect hedge funds from losing a whole bunch of money having to cover their short positions, this just really didn't sit well with a lot of people. And on top of that, Robinhood as a company just has not executed that well. I've been a long-time user of Robinhood, starting my account back in 2016 with them. And from time to time, there's just been plenty of weird issues that just don't really seem to happen with other brokerages, which has made it seem like Robinhood is kind of a crappy brokerage. So if there's a loss of enthusiasm from new people signing up for the stock market, Robinhood has been labeled as a kind of untrustworthy brand. And on top of it, people just want to go to other exchanges where the experience is a little more smooth. This really does put Robinhood in a tough spot. But I think what makes this worse is the current valuation for Robinhood. Now, typically when an acquisition occurs, the purchasing company will come in with a higher price over the current share price. But when we look at Robinhood's current valuation, it's right now at about $7.6 billion. Looking at Robinhood's revenue and net income, we can see that 2021 and 2022 have been an absolute bloodbath in terms of their profitability. The past year's seen about $1.6 billion in revenue, but they've lost about $3.7 billion in the same time span. That is a massive loss, and Robinhood really has to get this together. But looking at this chart, we can see the current forecasted earnings, that Robinhood is still not projected to become profitable by 2024, but the current estimates do see a much better position for them going forward. When we look at the balance sheet though, I think this is where things get really interesting. So they have about $19 billion in assets and about $12 billion in liabilities, which leaves them with about $7.1 billion in equity. Now, if you remember back to their valuation, Robinhood is currently trading at a market cap of $7.6 billion. That means that they're trading almost at their liquidation value right now. This in theory should be as low as Robinhood should ever be worth. If they were to just sell the entire business and walk away, this is roughly what everything left would be worth after they pay off all of their debt. When we look at their debt to their equity, they actually have very little debt, so they are in a very good position in terms of their balance sheet at the very least. I do think that valuing Robinhood is fairly tricky here. I would expect a stock brokerage like Robinhood to eventually be a company that earns about 10% profit margin. That seems about right for them. And if we price them with fairly low growth, let's just say 8%, that puts their price to sales ratio, the fair price to sales ratio, at 1.6. And if we say at the top end they grow at about 12%, that puts them at about 2.3. This is looking at this with the expectation that the stock market enthusiasm doesn't come rushing back, that people still hate Robinhood going forward, and it's just a much more difficult path. But I do want to point out, when we look at the analyst revenue growth, that they do currently project a much higher number for them. But I actually don't mind discounting the growth rate just a little bit, just to account for the fact that Robinhood is still projected to take losses going forward, which does put a little risk into this valuation. Robinhood is at a fairly cheap price, especially when you consider the fact that this is a very conservative valuation that I'm using here. If we were to up these numbers to, let's say, a top end range of 18%, which is the low number for 2024, that puts the price to sales ratio at 4, which would make Robinhood look absurdly cheap at this price. But again, Robinhood has not really executed their business very well. I've actually been very disappointed with their financial performance. If I had to guess, it seems like most acquisition deals have come in around 25% premium of the current stock prices. So if that was the case for Robinhood, that would put the offer around $11.40, which is 25% higher than the current share price. And we can see when we look at this chart, that would put it at a very cheap price. When we think about Elon's deal for Twitter, that was not the case. We can see that Elon's offer is fairly expensive compared to the underlying fundamentals of Twitter, and that's why I said that the Twitter board had no choice but to go through with it. Keep in mind though that Twitter was trading at a much higher price than the $39 it trades at today. I think it was around $45 or so, but this is why it seems like a more difficult deal for Vlad to accept. He has 50% of the voting shares of the company, so he is the decision maker when it comes to whether or not they would allow themselves to be bought out by FTX Crypto. And while the stock is very cheap, it is a bit of damaged goods right now. I don't know that Robinhood can really recover from the brand damage that it suffered post GameStop, especially in an environment that continues to get worse with basically all of the optimism and enthusiasm with their product, aka the stock market going through a bear market, taking away the opportunity for Robinhood to bring in a whole bunch of new users. If they were to not sell, potentially the stock could be worth somewhere between about $17 to $40, which I know is a crazy wide range, but I mean the potential outcomes of this company are pretty wide here. So we're going to have to wait to see what Robinhood decides. But that's the video, and as always, thanks for watching.